I want to talk about the actual stats from March 2020. Now, this is going to be along the same lines where I cover, every single month on the podcast, which is comparing the stats for the previous month. So, if you've not, heard me cover these before, I always like to compare March 20 to March 19 or month to month. So year over year versus this month versus the prior last month. Because Denver, we have very well-defined seasonality patterns, and the market in March is different than February, and it's different in January. So if you compare year over year, you get a much more accurate picture as to how the market is doing relative to that time. Because March is usually one of the hottest times for selling properties in Denver because the weather's getting nicer. A lot of home buyers are wanting to sell and buy new properties then. That way they can move during the summer, so when their kids aren't in school. So we have a couple patterns there that really impact the market. So that's why we like to compare year over year. So I have a slide up here from DMAR, so Denver Metro Association of Realtors, and they just, every month, they take data from RE Colorado, which is their MLS. They compile it, they publish it, and it's just great data. And they always get it out on like the second day of the month, so we get it really quickly as well. And they do a great job of compiling it. So you're seeing that slide here. You can download the whole pack if you really want to, nerd out on it. But I have a few data points that I like to look at and discuss. So looking at active listings here, and that's this first row, we'll compare March 20 to March 19. So we have about 5,776 properties, so 5,800 approximately this March, compared to about 6,300 a year ago. So that's what a 500 property decrease as far as active listings on the market. So what defines active listings is that's everything that's the new listings, subtracting out properties that are under contract or sold, and also properties that have been withdrawn or expired by the sellers. So the reason we're seeing a drag down the listings, because that's down about 8% from the year, is because we've seen a lot more properties withdrawn than normal, which makes sense. I mean, if you put yourself in your typical homeowner's shoes, if a lot of people are working from home now, their kids are home from school, everyone's at home now, 24 hours a day basically, or 22 hours a day for the most part, they don't want a bunch of random people coming through their house for two reasons. One, if they're trying to work and their kids are trying to do the virtual school work, they don't want to leave their homes because it's a pain in the butt for their work day and school day. But also they don't want random people coming through their house for health reasons. So if I were selling my house right now and I was living in it, I'd probably withdraw it too because I don't want a bunch of random people coming through my house for obvious coronavirus reasons. Now, if it's vacant, that's a different story. So we've seen a lot more properties withdrawn from the market, and that's why we're seeing the active listings drop. So it's going to be interesting to see what the data is for April, how much the active listings are, because I actually thought the active listings would have dropped more than this, and this is just, my best guess, what I tell myself before I look at the data. So seeing it drop 8%, I actually was expecting bigger than that. I had no data to back it up, just, my talking to their agents and seeing what people are doing out there. We've actually seen more listings come on the market, so that actually help offset the withdrawals. So we're actually seeing about 7% more listings on the market, so about 6,600 new listings, where we were about 6,200 listings last March. So on the slide here, they say pending. For some reason, RE Colorado MLS changed the word under contract to pending. So under contracts are down. So we were about 5,400 properties under contract last March. Now we're just under 5,000. So down about 7.5%. So no big surprise there. Fewer properties in the market. I also know, a lot of contracts have fallen apart. Like we just give you guys an example. I guess probably about 6 weeks ago or so, we had put an offer in on an investment property we like, just a really good cash flowing condo in Aurora. We put in a good competitive offer, but we lost out to a cash offer that was higher price than ours. So great, that's just the way it goes sometimes. Or not great, but whatever, that's just the way it goes sometimes. And then, I don't know, about 2 or 3 weeks later, the agent reached back out to us and said, hey, the cash buyer, fell off. And this was right after the stock market just tanked. So, we don't know the story to it, but we're assuming, hey, he was all cash. A lot, maybe he was in the stock market or maybe didn't have quite that much cash anymore. So he canceled the contract. And the agent reached back out to us because, we'd done a strong offer and we actually had done a deal with its agent once or twice before as well. But they had they'd already taken a backup offer weeks ago, and that agent did not think that backup offer would move forward with it. But they did, so that backup offer had first right to go under contract. It's just an automatic contract provision. Went under contract on there, and then we just heard, I think it was Monday, so like 2 days ago, that buyer fell out. I think the agent said that buyer got furloughed, their job got furloughed. And so that contract fell out. So she called us back and said, hey, do you guys still have a buyer that wants to buy it? We said, oh yeah, it's a great property, numbers make sense. So we're going to grab that property. So I use that example because that is not uncommon. We are not the only agents to experience that. I've heard that from other agents as well. And we've had a couple deals fall apart just for the same reasons. Like, the economy is it's wonky right now. Like it's not doing great. So I think we're seeing a lot more under contracts for that, or falling out for that reason, because people are either getting scared or, people had a job 2 weeks ago, they don't have a job today, or they're furloughed today. So it's a lot of uncertainty in there. So the number of properties closed, we're down about 5% over last year, or over last March. So about 4,300 this March versus like 4,500 and change last March. So, kind of goes with the other stats on there. Average home price went up. It's up about 7% from last March. So last year, the average price was about $478. The average price this year was about $513. The median price was up about 7% and change as well. So the median price was about $415 last March, and now it's about $446 this year. So I'm not a big fan of either of those stats to really get accurate pricing details, but it kind of shows you the overall trend of the market. Now remember, the average is where you take all the properties, add up their total sales price, divide it by the total number of properties. The median price is, hey, what's that property right in the middle? If we sell 100 properties, what's the value of the property at, 50 or 51? And so that's more, hey, basically what's right in the middle there. So both of those going up, no surprise there. I don't think the market was going to appreciate 7% from last year. I thought it'd be a little bit lower just from the general trends, but goes to show it's still a very strong market. And, we were just kind of back to what we have been the last few years until we hit the, coronavirus brick wall. So it'll be interesting to see how the April numbers pan out on there. Days on market, they've dropped a little bit. Yeah, no surprise there. Close price to list price. So what this is looking at is like, what's the original list price of the property? So if the property is listed at $100,000 and then they drop it to $99,000, then it goes under contract. They look at the difference there. Hey, that's a $1,000 difference or a 1% difference. That would be, the close price was 99% of the list price. So in March of 2020, the ratio of close price to list price was 99.34%. Now in March 2020, it was 99.85%. So it was up 0.5 of a point. And I'm not a stats guy, but 0.5% is pretty insignificant to me. So I don't think that's a big change. So right there, I'm just highlighting this because it shows, we're not seeing discounts in the market yet. If anything, prices actually sold a little bit closer to list price than they did a year ago. So no major discounts happening yet. All right, let me look through my other notes here. If you guys haven't seen the headlines as well, a lot of the iBuyers have suspended operations in Denver and also a lot nationally. So the iBuyers, those are like the big buyers, the Zillow iBuyers, where they're basically doing their fix and flips. The Zillow, the Redfin, Open Door, I forget some of the other big companies, but I know those are three big ones. They've suspended all the operations here in Denver. And from what I can see from headlines, they've pretty much done that all across the country. And not just they're stopped buying. It sounds like, too, a lot of the properties that are under contract, they just cancel those contracts as well to exit. And My guess into that is because that's the uncertainty into the world right now. They don't know, hey, great, we're buying it now. And if you guys haven't seen those numbers, a lot of those companies, at least Zillow, they basically sell properties at a loss. They buy it at $300,000. Maybe they sell it for $310 or $320. But when we factor in all the fees of selling real estate, all that, oftentimes they're losing money. But from my understanding, they're doing that to kind of gain market share. But also that's their loss leader to get other avenues of income coming in, of selling leads to agents, of getting mortgage business with their new mortgage side of the business, with just kind of getting more business from other facets of it. So it's like a grocery store selling milk for a cheaper price to get people in the door. Well, that's really tough to do if prices are dropping. It seems to make sense if the properties are appreciating a lot. But if prices are dropping, it does not make sense. And also, I'm assuming they're going to have liquidity issues as well. I know a lot of these companies, they have a lot of cash or a lot of investors. I'm very curious to see how those numbers are coming in as well. Like Loftium, for example, go off a little tangent on here. Loftium, I think they're a startup out of Seattle from, 2 years ago or so. They're a fairly new startup. And they're the company where they are been going around. I know here in Denver, I've talked to quite a few landlords, more than I thought. They've come in and they've signed leases with the landlord. So if I'm a landlord and I have my rental property, and I've got my single family home in Denver, and it normally rents for $2,000, a lot of times Loftium is actually paying above market rent. So I've heard cases where it's based, hey, great, it's worth $2,000. They're getting rent for $21 or $22 a month from Loftium, so above the average market rent. And what Loftium does then is they've got a process for getting a long-term tenant in there, and then it becomes that tenant's primary residence, and now that tenant and Loftium can legally Airbnb out the property and stay within the rules of Denver. And so they're able to pay a higher price to the owner for rental income because then they're Airbnb-ing it, and they are keeping the difference. Now, I believe some of it, I don't know quite all the details, but I've talked to at least 5 investors and landlords that I know that have done Loftium. And I read an article on Loftium a week ago, and they just, because Airbnb bookings have just pretty much stopped, they're in major trouble because they have no cash coming in and they've got a lot of liabilities with all the leases signed. So it's just one example for a lot of these companies that have been doing these aggressive marketing tactics like Loftium, like the Zillow iBuying. I think we'll see a lot of that end. And just from like a business number standpoint, I'm really curious to see how that plays out here next couple months when they release their financials and just kind of getting to dig through that stuff. So all that stuff is happening as well. So what does that mean? Well, if there's less iBuyers out there, in one sense, it's bad for sellers because there's less options for them out there, because for some sellers, those situations are great for them. But I think that will give more opportunities here to agents and also more opportunities to investors, especially people doing, fix and flips, just because there's less competition out there. So that is, one of the opportunities appearing right now in the Denver market is that a lot of those companies will stop buying properties. The other thing that's happened, I'm sure you guys have seen the headlines, lenders have really tightened up their lending requirements, not just on the jumbo loans. Like a lot of lenders, it sounds like, aren't even doing jumbo loans because investors, Wall Street's not buying their loans. So they don't want to, if they can't sell the loans, they can't give the loans and fund them. I know a lot of lenders too, they've drastically increased their underwriting requirements for FHA and VA loans. And that's often because those have some of the lower down payment programs, lower FICO scores, usually higher debt to income ratios. And with all the forbearance programs going on now for lenders and just a lot of these, a lot of times those are for entry-level home buyers as well, I've seen dramatic shifts in the lenders raising those requirements. So if you're out there using those loans, make sure you work with a lender and understand what they're doing because what I've seen from lenders and title companies is those things are changing almost on a day-to-day basis. So, punchline here is that the market has not gone off a cliff. We may see average prices go down because of that selling the less higher end properties, but overall it'll probably still go up for the rest of the year is my guess. And that's just because I'm looking at the huge supply and demand issue, but I really don't. That's just my best guess. I'll come back and listen to this in a year and see if I'm right or wrong. And next month, or maybe a few weeks from now, we should have a lot more data from rental properties, because I know April 1st, and this is, I think, going to be the thing that affects a lot of us landlords out here, is how many tenants are paying their rent right now. And so, usually that April 1st, April 5th is that window where, hey, rent's due April 1st, and there's usually a grace period to April 3rd or April 5th, depending on the lease and the property manager. So I've not gotten a lot of great data yet from property managers on how many people have paid. I did talk to one of my property managers who's managing my 4-unit, and they said she roughly had about 80 doors or 80 units under her management. And she said, I forget the exact number, but it was like pretty low number. 7 or 8 people could not pay their full rent for April, due on April 1st. But they're going to do a partial payment and then, pay the rest through April or May. It wasn't, and she had no one that said could do 0 payment, which actually surprised me. I'm sure, other property managers and landlords out there are experiencing different things. So I think when we get more data here next week or two, I'll definitely share that as I get it, because I'm really curious to hear how that's working out. But what I'm expecting is I think we will definitely see higher vacancy, because it's going to take longer times to rent. I mean, I've got a couple vacant units now, and they shouldn't take 4 weeks to rent, but that's kind of the way things are right now for a lot. It's a lot slower out there. People are still renting properties. I got one rented 2 weeks ago. Took longer than normal. I got 2 more out there, and hey, that's the way it goes. It's just going to take a little bit longer, and I'll let you guys know how long they take to rent and if I have to drop rent prices as well. Actually, I already did one small drop a week ago. I'll probably do another drop this week just to get people in there. So that's it for the market update. Again, to recap, what we're doing here while we're on shelter in place, probably for April and May is my guess, is to do a lot of webinars here. So definitely be on the lookout for calendar on the calendar at denverinvestmentrealestate.com. Get on the email list. I've got a lot of deal analyses coming up. We'll be doing a lot of house hacking classes as well. I want to get a lot of webinars out there around planning your real estate strategy and figuring out how your retirement income from real estate will come out to play. So lots of good content. And my plan here with my downtime is to work on content. Projects are on my to-do list. And since I'm at home most of the time, I'm not really doing a lot of property transactions right now. A lot of other people are the same way. We're going to do a lot of webinars, so hope you guys can join us. Oh, and actually, I see a couple questions in here, actually. So Kellen says, do you have any information on how stable the rental market is? No, I don't, other than what I just told you a few minutes ago. But from the 2 property managers I've talked to the last couple weeks, just kind of some verbal stuff, and I saw an interesting article, I think, from the Wall Street Journal. It was not as dire as I expected it to be, but I think we'll learn more, through the month of April. Pete says, are these stats from the 6-county metro area, or are they from the entire MLS? This is for, it's a good question, I forget. This is for the 11 counties around the Denver metro area. So Adams, Arapahoe, Boulder, Broomfield, Clear Creek, Denver, Douglas, Elbert, Gilpin, Jefferson, and Park. So I've compared these numbers to the 5 counties in Denver Metro, and the numbers are all pretty much similar. Obviously, we have more inventory, more homes sold, but as far as the percentages, they're all about the same. And the reason I like to use DMARS stats is because they get them out the next day, where the data for the 5-county, 6-county metro area, a lot of times they don't come out until the middle of the month. Now, I could go compile it myself, but frankly, I just am too lazy to do that and don't have the time to do it. So I like to go with the DMARS reports, and I've not seen a huge difference as far as data. Obviously, numbers a little bit bigger, but all the trends and percentages, they're about the same from when I've looked at it. All right, everyone. Thanks for hanging out, and I'll see you in more webinars.